Hello guys, welcome back to Study Effect channel. On this channel, it's about forex trading, binary trading, and crypto trading. Here, welcome, and if you're a returning subscriber, thank you for always coming back to watch my video. So guys, on today's video, we're going to learn different types of forex analysis. So forex analysis is essential for traders seeking to navigate the complex and dynamic world of currency trading. By understanding the various factors that influence the currency prices, traders can make informed decisions and enhance their chances of success. So there are three types of forex analysis. The first one, we have fundamental analysis, technical analysis, and sentiment. So the fundamental analysis involves evaluating economic, political, and social factors that can affect currency values. Traders look at various indicators such as interest rate, employment, inflation rates, geographical events. So geographical, it's like there is war, etc. So the goal is to understand how this element influence the supply and demand of a currency. So the key points here is the economic indicators, so reports on GDP, employment rates, and consumer spending. So central bank policies, so decision on interest rate and monetary policy can greatly impact currency strength. So another thing that we have is the political events, election, legislation, and international relation can introduce volatility. So fundamental analysis help traders gauge the long-term value of currency and anticipate potential market movement. The second type of analysis is the technical analysis. Technical analysis focuses on price movement and trading volumes, using historical data to analyze the patterns in the trades. Traders employ various tools such as charts, indicators to analyze the past market behavior and predict future price movement. Points that the technical analysis use is the chart. Example, we have line charts, bar chart, candlestick charts, which are used to visualize the price movement. Another one is the indicators, tools like moving average, RSI, MACDs. They help identify the trades in entry and exit point. The next one that we rely on it's the support and resistance level. So identify these levels can help traders determine where the prices may reverse or break out. Sentiment analysis measures the overall attitude of traders and investors towards a particular currency, the forex market as a whole. It involves assessing the position of market participants, which can indicate potential market direction. So example, we have reports and survey like the COT report that reflects the positioning of large traders and institutions. Also, you can check the social medias in the trades like Twitter, financial news, which can provide the insight into public sentiment. Each type of analysis has its strengths and weaknesses, and many successful traders use a combination of all three to make informed decision. So if you're a long-term investor, fundamental analysis may be more suitable. For short-term trading, technical analysis might be more effective, and also you can choose to combine it with fundamental because news they usually happen each and every day. And sentiment analysis can enhance your understanding of market trade across all trading style. You can choose to check the social media, use the news, and also use the technical, which is indicators and other things. So that's it for today, guys. I hope to see you in my next video, and I hope you're learning. See you guys. Bye.